Medibank has delivered another healthy boost in profit, putting the spotlight again on the government's long-standing policy to privatise the health insurer. It's estimated Medibank Priv could fetch anything up to $4 billion if it were put on the market. It's just one shining example of the nation's silverware, which could be sold off for billions. However, critics argue that privatisation is just a lazy way to reform underperforming government businesses. Neil Woolridge has the story.
A bumper profit might be just the excuse the new government needs to put Medibank Private on the market. The health insurer is reporting a 14% jump in operating earnings. That, combined with improving sentiment on share markets, is leading to heightened speculation the government will follow through on its long-standing policy to sell the business.
Why can't we have competitive insurance across the board? Government sets policy, there's a regulator. It's an easy one, really.
The Coalition is preparing for a commission of audit into federal finances, but is yet to give any commitments on privatisation. Among the nation's silverware is the Australian Rail Track Corporation, estimated to be worth $5 billion, Medibank Private, valued at $3 to $4.5 billion, a 13% stake in Snowy Hydro, worth around $740 million, and Australia Post, which no one seems game to value, given the uncertainty over whether its loss-making mail business would be separated from its profitable parcels operation.
What government should do is regulate, make the competition fair. If it's a monopoly, make it price as if it were competitive.
Privatisation is often a lazy alternative to what I call management reform. And we do have some very efficient, well-managed entities in government. Australia Post is one of them.
The UK is in the process of floating a stake in the Royal Mail, which is valued at nearly $6 billion Australian dollars, and that's emboldened some to consider a sale of Australia Post. However, many argue the postal service is a natural monopoly which should be owned by the government.
If you're going to run a monopoly, far best it be a government monopoly than a private monopoly. If it were to be broken up into competing little postal services, there'd be no service except for those between highly populated capital cities.
At the state level, there's up to $120 billion in assets for any premiers game enough to take on a privatisation bunfight. The most valuable are New South Wales and Queensland power assets, South Australian water and the Port of Melbourne. Michael Porter was a key figure in Victoria's electricity privatisation in the 90s and says it resulted in a drop in wholesale charges and a fall in unemployment despite initial job losses in the power industry.
The track record on privatisation in Victoria, in Australia, is very good, and the comparison between Victoria and New South Wales is a remarkable indictment of New South Wales government state ownership.
But Ian McCauley says assets like power and ports are often best left in public hands.
The private sector is not particularly good at that sort of long-term management, not because it's incompetent, but because the incentives are not there. And it's very easy, say, for something like a port or an electricity company, to skimp on maintenance.
And he says the arguments about paying down public debt are misguided because they ignore the fact that governments are also losing an asset from the public balance sheet once it's sold.